It's going to be interesting to see how regulations pay out for crypto, right? Because, or any other types of digital assets, because the boomers have stocks to sell. Does anyone want these stocks? Maybe to some extent. Do they want that big suburban house or whatever they have, or apartment in the city? I don't know. So I think there's going to be a massive issue in terms of if the younger generation wants to buy things that the older generation is selling, and they need to sell those things to fund their retirement. How does that square? Are they going to increase taxes because the asset prices of things the boomers own and went down and they can't afford their retirement? So then they're going to tax the young more to pay for their retirement. And are the young going to accept that? I don't know.
What would you guess?
I think there's going to be a lot of intergenerational conflict. I don't know the outcome of it.
What?
But it could be money printing at the end of the day, right? Because it's a very easy way for the government to solve this problem.
The crypto market is heating up again, but this time it's different. It's not just retail hype or another altcoin cycle. It's something deeper. Arthur Hayes, the former CEO of BitMEX and now CIO of Maelstrom, predicts that Bitcoin will reach $250,000 by December 2025 and could surge to $1 million by 2028. However, this isn't just another bold claim. It's grounded in cold, hard economics. A historic $9 trillion money printing wave might soon hit the system, and Bitcoin is perfectly positioned to benefit. Hayes says it all starts with demographics. Millions of baby boomers are retiring. They need money, and they're planning to sell off stocks, bonds, and real estate to fund their golden years. But there's a problem. Younger generations are already struggling with student debt, high inflation, and stagnant wages. If boomers dump their assets and no one is there to buy, prices crash. And if prices crash, retirement dreams collapse. To prevent chaos, the US government faces a decision: raise taxes on the young or print money. History tells us they'll choose the printer. Quantitative easing, stimulus packages, and bond buying programs are all part of that playbook. Hayes believes the next round will be massive. Mortgage giants could inject trillions. Banks will likely follow. And if foreign investors back away from US treasuries, a trend that's already underway, the Fed and Treasury will have no choice but to step in directly. And when that liquidity flood begins, it won't just lift every asset. It will target Bitcoin. Now, let's watch more clips from Arthur Hayes' explosive session to gain more insight. Please don't forget to like, subscribe, and enable notifications for more in-depth content. Thanks for joining us again. Enjoy the rest of the video.
It's going to be interesting to see how regulations pay out for crypto, right? Because, or any other types of digital assets, because the boomers have stocks to sell. Does anyone want these stocks? Maybe to some extent. Do they want that big suburban house or whatever they have, or apartment in the city? I don't know. So I think there's going to be a massive issue in terms of if the younger generation wants to buy things that the older generation is selling, and they need to sell those things to fund their retirement. How does that square? Are they going to increase taxes because the asset prices of things the boomers own and went down and they can't afford their retirement? So then they're going to tax the young more to pay for their retirement. And are the young going to accept that? I don't know.
What would you guess?
I think there's going to be a lot of intergenerational conflict. I don't know the outcome of it.
What?
But it could be money printing at the end of the day, right? Because it's a very easy way for the government to solve this problem.
That's the solution of everything.
Does money printing lead to more degen activity usually?
Yes, because again, if you don't have a lot of financial assets and you're watching all this inflation happen all around you, you have to use more leverage in the little bit of savings you have to. I think it'll be rolled in slowly over time, and so you're not going to see this knee-jerk reaction. I think the Trump administration learned that these sorts of massive sort of changes are going to create outcomes that they don't like, which is heightened bond market volatility, things going the wrong way. And so if capital controls are going to be phased in over time, they know that they need to replace that buying. Either it's the Fed, it's the Treasury, it's the banking system, it's some other private sector actor that is allowed to create credit very cheaply and therefore replace these foreigners who will be forced to sell these assets.
Stocks have re-correlated with the 10-year yield, and so has Bitcoin. Do you see that correlation holding between these three classes?
No, I think that there will be some risk off events, and we'll see bond market volatility heightened. I think Bitcoin will sort of assert itself as a hedge against this. Foreign money went into the US because the US markets have been the best performing, whether it's stocks, bonds, or real estate. And if that money is leaving and it's going to go back into their local markets, then the US markets don't do so well. And maybe it's better to own Taiwanese stocks or Indonesian stocks or Thai stocks, or all these other emerging market countries who are basically going to say, okay, we're forced to repatriate this money back on shore. Our currencies appreciate. Our consumer gets wealthier because now they can purchase more things, and maybe people want to build business domestically to service that economy. I think it's a way to allow banks to engage in the same sort of trade that Tether does. And so if I'm a bank and now I can create my own stablecoin, I essentially can onboard deposits at zero cost. And then if they remove the supplemental leverage ratio exemption, I can buy a T-bill and I get to capture 100% of that income. So I think that we get to 250,000 by the end of the year. It'll be bumpy along the way, obviously, but that's sort of my end of year price target. And then $1 million Bitcoin is what I just got off stage talking about how they're going to print, I think, in the realm of $9 trillion-ish between now and that period of time. And that is, Fannie and Freddie, the government support entities that are allowed to create mortgages in the US. They will print $5 trillion. You will have probably up to $1 trillion purchased by the banking system due to supplemental leverage ratio exemptions and purchasing things that the foreigners are selling. And I think the banks are going to because they now don't have to hold all this equity capital against their treasury book. They can lend more into the real American economy. And so you're going to see the amount of loans going to manufacturing firms increase, which is, again, that's an increase in credit, and that will make its way into crypto as well. So Bitcoin has a fixed supply. It's obviously a much smaller market in terms of market cap. And so if you have a lot of things chasing a very small door, then the price goes up on the margin. And so that's why Bitcoin has been the best performing financial asset in the last 15 years. It depends on what the financial pressures are of the government, right? So I think they have a 200,000 Bitcoin that they seize from people, the U.S. government that is, and that could be sold. Obviously, if there's a budget pressure, then that's there's variable. There's money there to sell it, so they can sell it.
Yeah, but do you see them buying more Bitcoin? They haven't done that yet.
I don't think it's politically palatable to buy Bitcoin and print money. I think if you're going to print money, either it's tax cuts or it's build a bridge or build a hospital, these sorts of things that benefit more people than just a small sector of people who own Bitcoin. I mean, they could. Anything is possible, but I just think it's bad politics. I think if you create all this money and you could spend it on anything you want, surely spending it on buying Bitcoin is probably not going to be the best way to get votes. Well, I think obviously it's probably less decentralized than they advertised. And it seems like the people in charge of Hyperliquid decided that they wanted to preserve the buying power of their HLP versus adhering to what the market was saying with the liquidations of this jelly token. So on one hand, yes, it's not very decentralized. On the other hand, it's like, oh, well, I guess they really care about this HLP, which is the backstop for a lot of the markets. So I feel more comfortable trading there. Because at the end of the day, traders don't care about decentralization. They just want liquidity, and they want a nice range of products to trade. So if Hyperliquid offers that in a decentralized way, then fine, let's trade there. I don't think they care, right? A lot of people are just invested in the index. And so they own an ETF, and the ETF owns a lot of stuff, right? That may or may not agree with their particular sensibilities, but they don't care. They just want to be in the index.
With exchanges and centralized exchanges becoming more mainstream, do you see a scenario in which they start siphoning deposits from the regular person from large financial institutions like JP Morgan's and the Bank of America's of the world?
I don't think so, because these banks have better distribution networks than the crypto companies.
So there's no direct competition in the foreseeable future.
Oh, there absolutely is direct competition, right? So if JP Morgan offers the ability to buy Bitcoin and Coinbase does, it's the same Bitcoin that you're buying, right? So then it comes down to really just fees. And so can JP Morgan offer a zero fee trading because they make so much other money in other places around the bank versus Coinbase offering 0% trading? I don't know. I'm not an expert on the Coinbase revenue drivers, but I would imagine a lot of their revenue comes from this very high margin brokerage business that they operate. And so if a JP Morgan or a Bank of America says it's zero fee Bitcoin trading, bring your balances here, bring your bank deposits here, well, then what is Coinbase going to do?
Just look at what's already happening. Taiwan's currency recently surged 10% overnight, a signal that big players are repatriating capital. It's not just Taiwan. South Korea, Malaysia, Thailand, and Singapore are also watching their money come home. Hayes believes global capital is quietly pulling away from the US, weakening the dollar's grip. The response? Print more dollars to fill the gap. And that's where Bitcoin shines. Unlike government currencies, Bitcoin doesn't bend. It has a hard cap. Just 21 million coins will ever exist. Only around 160,000 new Bitcoins are created each year. No government can increase that. No corporation can dilute it. But demand? That's a whole different story. Bitcoin ETFs are attracting hundreds of thousands of coins, more than 3 times what is mined annually. Big corporations such as Tesla and MicroStrategy have already made significant investments. Even governments like Brazil, Japan, and the US are holding it. Bitwise estimates that ETF inflows alone could top $50 billion this year. So you've got exploding demand, you've got a fixed supply. The result? A price that doesn't just rise, it rockets. Let's watch more clips from Arthur Hayes' explosive session.
Yeah, so it's quite interesting. I won't go too deep into it, but essentially there were some interesting articles written in the FT by, I think, Brad Setzer and another economist, basically documenting how Taiwan life insurers are probably some of the richest institutions in the world who've been investing abroad. And essentially, Taiwan is obviously a big global manufacturing hub, semiconductors and all that. But the government and the central bank has a policy of keeping the Taiwan dollar very, very weak. And so to do that, they have to create Taiwan dollar local liquidity, which obviously is the reason why apartments are so expensive in Taipei and other cities. And they accumulate dollars. But they don't want to look bad like currency manipulators to the United States government. So they take all these dollars and they funnel them to the Taiwanese life insurers. And then these life insurers go and they buy bonds and enter in all sorts of structured derivatives with large banks. Essentially, they have a lot of U.S. Treasury bond exposure. And also, a lot of hedge funds like to fund themselves in Taiwan dollar because of this persistent weakness that is encouraged by the government. And then they engage in massive carry trades. And so what happened in the first week of May is that there is this fear that, oh my God, what if the Taiwanese lifers start going out of the treasury market, taking that money and repatriating into the Taiwan dollar? And basically a lot of these hedge funds exited their carry trades and got stopped out. And that's why you saw the 6 or 7% move in the Taiwan dollar. And I think that the authorities didn't want to step in and create more money in Taiwan to basically reverse those flows, because they wanted to show to the Trump team when they're negotiating that, hey, we're not about to let our currency continue to weaken. We accept that we're going to have to allow the Taiwan dollar to strengthen. And I think that's why you had this sort of massive move in the Taiwan dollar. And I expect it to continue to strengthen over time.
Do you think that's going to happen in other Asian countries?
Yes, and it already started. You saw it in South Korea. You see it to some extent in Singapore, Malaysia, and Thailand. Any of these countries that run these persistent programs of currency weakness, accumulation of dollars in their reserve account and investing abroad, that money's coming back.
And you said there is capital control in U.S. coming.
Yes.
On foreign investment ownership.
So I think they're going to start by taking away the withholding tax exemption. There's already talk of that happening where, foreigners don't pay the 30% tax that Americans do, getting interest on their bonds. So they're going to remove that. And so it's going to mean that, hey, maybe this treasury bond isn't so attractive and I'm not going to own that. I'll own something else. So I think that's going to start happening.
Does that mean a market crash?
No, because they'll print the money to make sure that all the foreigners who leave, they'll replace that with printed money.
The retail interest in the altcoins, and actually some people track also crypto channel volume, viewership volume, is significantly lower now than 4 years ago, despite the fact that Bitcoin and many other things have reached new highs.
Again, I think a lot of these coins have not performed very well. They were priced wrong. They were priced too expensive. And then their actual fundamentals, when you actually said, okay, you're launched, the hype is over. Okay, where are the clients? Where's the revenue? Oh, we don't have any.
Yeah.
But this thing is a 5 billion FDV. Well, you can't 10x that. It's just hard. So you go from 5 to 50. It's easy to 10x 100 to 1 billion in terms of on the marginal price basis. So I think it's just the price is too expensive.
Is it too far-fetched to say that Bitcoin has become an institutional instrument now and the retail crowd is just no longer interested in that?
No, I'm sure there's lots of retail interest in Bitcoin. It's been well performing and it's the easiest one to understand.
Okay. Open interest in Bitcoin futures reached unprecedented levels recently. I think it was checking my notes, $80 billion on May 22nd, $15 billion increase in just 5 days. It's highlighting just unprecedented leverage. What does this signal to you?
Just more interest in the space, right? Obviously, we rallied up towards all-time high, and obviously people are opening more leverage positions, thinking that we're going to run, past 110 much higher quickly. I think we want to look for basis expanding. So what's that premium of Bitcoin versus other things? And so I don't think it's anything crazy yet. It's like 10% or something.
How often do you rotate in and out of Bitcoin?
Not that often. Maybe make one or two big buying or selling things every year. Because again, it's I don't want to be trading too much.
Yeah. You don't have like a rebalance mandate?
No.
No.
There's no mandates. The mandate is outperform Bitcoin. So if we can invest in a new project and it outperforms the Bitcoin capital that we had to sell to invest, that's good. And then we'll buy more Bitcoin with our profits.
Right. Well, we've talked to a lot of Bitcoin maxis that say that the only way to outperform Bitcoin is to buy more Bitcoin. So in a sense,
Well, I mean, I think that's false because you could obviously there's a time period. Over what time period, right? Solana was at $7 and it went up to 300. If you put all your money in Solana at $7 and sold it all at 300, you definitely outperform Bitcoin over that time period. So,
how do you personally pick altcoin? What do you look at?
Narrative. And now it's all about cash flow. So do you generate a lot of cash flows? Is there a way for me as the investor to get paid by supporting you by owning your coin?
And not the valuation.
Well, I mean, early stage stuff, we have caps on how much we'll pay, very specific. But liquid stuff, it's really about cash flows for me.
Don't you feel narrative change too quickly? It's very hard to catch on.
It does, but if you pay the right price, it doesn't matter. If you pay a low enough price, if it launches, most likely you'll make money. But if you pay the high price when you're chasing the narrative and trying to be in every single big deal, then that's when you lose money.
And here's what makes this cycle different. Bitcoin is no longer an outsider. It's moving to the center of the financial system. The US government already holds around 200,000 Bitcoin. If pressure mounts, they could even sell, not because they doubt it, but because it has become a recognized liquid asset. That reality flips the old narrative. Bitcoin is no longer a protest coin. It's an asset governments, hedge funds, and corporations are already using. However, while Bitcoin strengthens, the altcoin space is becoming increasingly concentrated. Most tokens don't have products, users, or revenue. Their market caps are inflated by hype rather than substance. Hayes and other analysts argue that only a few altcoins with real utility, like Ethereum or newer protocols generating actual cash flow, might survive this next wave. The rest? Dead weight. Hayes says even exchanges aren't safe. The market's crowded, margins are thin, and big banks like JP Morgan could soon offer zero-fee Bitcoin trading, wiping out weaker platforms overnight. Hayes says if he had to start over, he wouldn't build a new exchange. He'd dive straight into meme coins or launch pads because that's where the speculative heat is now. But forget the noise. The core idea is simple. The world is on the edge of another major money printing cycle. Hayes and others say we're about to see $9 trillion in liquidity pumped into the financial system. If that happens, and Bitcoin's supply remains locked, the price action could become historic. And yes, $250,000 by December may sound crazy. But so did $60,000 when Bitcoin was under $1,000. So did institutional ETFs when the industry was dismissed as a joke. Every milestone felt impossible until it wasn't. Today, disbelief is fading. The data is loud. ETF demand is outpacing supply. Corporations are stacking coins, sovereigns are paying attention, and the financial system, as shaky as ever, is turning back to its favorite fix, printing money. Now it's not just about whether Bitcoin reaches $250,000, it's about being prepared before it happens. Thanks for watching, and don't forget to like and subscribe.